Greetings family, this is your brother in the kingdom, Emmanuel Destiny, and welcome to yet another valuable video. In this video right here, we're talking about how to trade Nasdaq like banks, and I'll be showing you in a very unique way, which is called the market makers method, and it's so mysterious to so many people or so many traders out there, and I'm so happy to be revealing this to you. I'm so excited to be sharing this information with you. Thank you so much for the feedback, guys. I'm getting a lot of feedback concerning the recent videos, and that has really encouraged me to drop this information to you right now. There's so many ways on how to really trade Nasdaq, on how to approach Nasdaq. There's so many methods out there, but the most interesting way is to trade like banks, and in this video I really want to share with you on how they really trade and using the market makers method. And what do I mean by that? Let's just really understand what is the market maker in this spectrum. In this industry of Forex, we have what we call the market makers. Okay, I'm gonna say something right now. So the market makers are the market players. The market players are your banks, your institutions, your stock markets, your big banks, such as like in South Africa we have the Reserve South African Bank or South African Reserve Bank. Okay, and obviously you have your other commercial banks. Okay, this makes up the market players, which is the market makers. We are known as retail traders. Okay, so what do I mean by that is that this market players, the reason why we call them market players, because they are the big boys in this industry. That means that whatever trade that they take, it kind of has an influence on the market behavior. Okay, what do I mean by that is that so many people just conclude that the market makers are the one controlling the market. I wouldn't say controlling per se. I would say they are in control of their behavior rather than the direction of the market. So what do I mean by that is that the direction of the market is based on the actual economic direction of that pair or that index. Okay, so let's say GDP USD or gold, it's said to be going up according to the economy, but you get that the formation, okay, the patterns, the repetitions that goes on your charts, your higher lows, your higher lows, your higher highs, your lower lows, and your lower highs, all of those formations, your consolidations, your ranging markets, your accumulation, all of these moments, volatility in the market being slow or less liquidity, this is because of market makers. And why is that because of market makers? Because when they trade, when they trade at specific times that really propels the market to move in a volatile or in a fast momentum way. So what they aim, right? A lot of people think market makers, they're using systems, or some of these big players, they're using systems to actually getting in big trades. And reason why they kind of move or control the market movement is because they get in with billions, millions, or even trillions that makes up the 5.5 trillion in the forex trading industry. Okay, so but one interesting thing is that they use simple methods. But their simple methods, they don't just get in on a trade because they feel like getting or they see an opportunity. They get in on a trade where they know that there's gonna be volatility, there's gonna be momentum. That means they look for loopholes or they look for moments in the market where the market is volatile. I don't know, I'm trying my level best. Please forgive me. I'm trying my level best to explain this. I'm trying my level best to explain this. So, but I'm just gonna show you on the chart on really the times when to get it in, when they get in, and when to know that they're actually in a trade, and that you should get in on those times. Oh, guys, I believe that this content is gonna bless you. If this is already blessing you and you didn't know this, please do subscribe. Please do like this and share it with other people out there, and do comment down below on really how is this changing your life, and do also comment down below and suggest other things that I may cover that will be relevant, that may be helpful to you and other people out there. God bless you. Let's just dive in it. Okay, family. So let's just really explain in practically to what I was saying. Okay. So when I said the market makers are the market players that control the market movement. What is market movement or market formation for some of you that don't know this? Uh, Market formation is the exact movement of the market, whether it's going down or going up or it's going sideways. They are the ones responsible for that. But you can get that overall, that currency or Nasdaq is actually going up due to the economy or news factors, right, that drive. So what I'm saying is that a currency or pair, it's driven by the economies to either go up or down, either long term or short term. But the movement therefore, it's actually controlled by the market makers. So in this case, if the market is going up because of the economy, but you get that the market is actually giving you higher highs, higher lows, higher highs, lower lows, all of that. Or the market is consolidating to a point where it gives us a breakout, then it starts going upwards, or it breaks below and starts going down. That whole movement there, or that whole formation, those patterns that the market normally gives you, it's due to when these institutions or when these market makers or these banks are actually executing trades. I hope you catch me. If you don't catch me, watch this video again. Okay, so I'm just gonna go on the chart right now and show you when you're gonna know exactly when banks are getting in, because you wanna target, because this is gonna unleash another style of trading, especially on Nasdaq, where you're not gonna hold trades longer. We're basically gonna go in within 10 minutes, more than 50 pips, or just even less. And I'm not talking about the New York Stock Exchange opening bell. I'm talking about unlocking momentum on Nasdaq, catching those injections of momentum on Nasdaq. Because that's when banks trade. They trade when, and as soon as they execute their trade, because they're trading with billions and trillions, that money that is pumped in, and we say there's buyers in the market, there's sellers in the market, sellers are in control of the market, buyers are in control of the market. This simply means that because they've pumped out so much money, it's coming in with volatility, because they've came in aggressively, because the market maker or this market players use fundamentals, or their trade is actually influenced by fundamentals. Hence, when they get in, it introduces market momentum or injection of momentum. So we want to catch that as we are on the chart, and I want to show you how right now. Just give me a second and we're just on the chart. Give me a second and we'll show you a practical example right here of today's trade. How I actually took a trade today. Okay. And knowing when to unlock this volatility or momentum. And when we speak of momentum, we speak of long candlesticks, the market giving you those long candles. Of course, it's quite relevant to trade within sessions. So this was the New York session, and I just want to show you something. I trade break and retest, I trade continuations in the market. So we can definitely identify there that there was a high in the market, okay? There was a high in the market. Let me just take it a bit up to just show you. I'll just point it out. This was a higher high that the market had created before. Okay, and we understand that according to my method of trading, that I wait for a break. Okay, or it broke again. I wait for the retest, then I take the trade. So I always want to take the trades at the retest. Okay. Yeah, so if it's a bullish market, I rather trade with the trend. That's one thing I've always said that countless times on the previous video. Trade with the trend because you have a higher probability. Now, I just want to show you something here um, that I have not shown you guys. When it breaks for the first time, that you can notice, it breaks with a strong momentum candle. It breaks with a strong bullish candle just to show us. Let me just highlight that and show you. Let's make that arrow black. It breaks out with a strong bullish candle. And that bullish candle, what is it telling us? It's telling us that buyers are now in control. There's strong buyers, there's a lot of buyers in the market. That's why even when it's breaking that high, it's showing me as a trader that institutional traders or the market makers are now executing trades, and they're executing with billions, trillions, and millions. So our $1,010 and hundred thousands are not actually moving the market. We're just riding along with the market makers. Okay, so we can definitely see that first sign. Okay, and when the market comes back to obviously retest it, retest with a nice weak rejection, and we can definitely see from then on that there was strong momentum that was unlocked. Strong momentum, long candle. Look at that, long candle. It goes up, comes back and retests, long candle, all the way up. You can definitely see those long candles coming in, and they're pushing the momentum obviously to the bullish side. And that's when we know definitely that institutions are now there. Institutions are trading at that moment. Oh, guys. Oh, guys. I'm just going to look for a sell example. Full sell setup that I did definitely trade. You can definitely see this lower low that the market had created over there. Let me just show you lower low, and you know how I trade. I did already teach that in the previous videos. Look at what happens when the market breaks there. It breaks with a strong bearish candle, telling us that sellers are now in control, telling us that there's multiple sellers in the market. And it's not talking about retail traders, it's talking about the banks, that they are coming in and they're selling in billions, they're selling in trillions, they're selling in millions. Okay, and the market obviously comes back and retests, gives us weak rejection right there. Look at that. Look at that. Afterwards, there is there is so much momentum that came into play right at that moment when the market touched that. So much momentum that came into play. Look at that. A long candlestick that was about 43 pips, and this could have taken a minimum of about 45 or just under 30 minutes. 42 pips under 30 minutes on NASDAQ. Come on, guys. So instead of holding trades, and just to highlight, I'm using the 15 minutes time frame to just see all of this. So you want to be just, if you don't understand how I go about getting trades, the previous video that I posted, I think about three-step method on how to get it on trades. Just observe it before you can actually know how I trade. And obviously it will make more sense on how to really understand the break and retest strategy that I use on Nasdaq. It has high probability, or it has high accuracy. I mean, most of the time I'm on the right side of the market, but we can definitely see. Remember, you wanna notice how the market breaks. It's breaking with a strong bearish candle that is indicating that there is sellers in the market, that bears are in control. And definitely when the market comes back, obviously provided it gives you weak rejection or whatever confirmation that you use on your side to see that the market is rejecting, it gave us, and there was a strong momentum that came into play. Long candles, even if you can, or possibly you've got that one. Whatever take profit method you use. Obviously, I'm gonna share other take profit methods that I use personally on my side on the next videos or so. But I hope this video has really blessed you. If it has, kindly give me that like, subscribe, and share this video with your friends and family. God bless you so much. I hope this strategy makes money for you guys.